Hello and welcome. My name is Matt Henderson. I'm an investment analyst here at True Potential, and welcome to Beyond the Headlines. When Brazilian President Mr. Bolsonaro was elected, he promised to restore the economy to health and tackle corruption. These were some bold promises and captured the mood of an electorate desperate for change. Identifying the problems associated with an underperforming economy is the easy part. The challenge, however, would be finding a palatable solution. In 2015, the economy suffered a devastating recession, and the weak recovery ever since has contributed to growing discontent. The chart shown makes this clear. There's no doubt that high debt is holding back growth. Moreover, if the economy fails to grow, the debt will become more problematic. High government borrowing is holding back foreign investment. As a developing economy, Brazil desperately needs inward investors. They in turn must have faith that the capital that they invest today will not be hit by debt defaults. The IMF has warned that if the Brazilian system is not reformed, the debt to GDP ratio of the country could hit 120%. This is a high level for any country, but increasingly so for a country trying to develop. As far as public spending and borrowing is concerned, the government has a plan but faces resistance. It involves restructuring an exceedingly generous pension system. In Brazil, the retirement age for men is 56 and is 53 for women. This means that roughly 42 million people are currently receiving pension payments. As the economy has developed, life expectancy has grown, and by living longer, retirees are putting more pressure on the taxpayers to help meet costs. To avoid more of the burden being passed on, the government is having to borrow even more. To end this, reforming the pension plan is arguably more palatable than raising taxes or borrowing more. On Tuesday, the 22nd of October, after decades of political deadlock, the Brazilian Senate passed legislation to enact reform. Under the change, the eligible age for men and women has been raised to 65 and 62 respectively. The turnaround this produces is sizable. Moreover, any resumption of economic growth will allow the debt to GDP ratio to fall, thereby encouraging increased foreign investment. In fact, there have already been positive signs that foreign investors are waking up to the opportunity in Brazil. If this increase is sustained, the spike in investment seen in July 2019 will eventually reverse the downward trend evident through the dotted line in the chart. So what's next? The aim for the president is to generate positive momentum. Year-on-year GDP growth has remained stubbornly low since he was elected in January this year. The hope now is that the reforms reduce the structural debt burden, igniting infrastructure investment via foreign investment. This has been neatly summed up by the Social Security Secretary as he stated, "The fiscal impact is extremely relevant. The main thing is that it creates predictability and legal certainty to demonstrate to the market that the country will honour future commitments." Positive commitments to reform and constructive comments like this will help government efforts to attract and sustain foreign investors and their confidence. Thank you very much for watching.